Hey everybody, what's up? It's Booksy. This is going to be part 2 of the Mother of All Charts video. Basically, on part 1, we went over a lot of different things that kind of set up the sequencing. We went over pattern expectations, we went over the alternating bottoms, we went over iterating fractals, we went over the timing chart. And in this video, we're going to bring it all together. We're going to talk about what it is that I'm seeing and why I'm seeing it. And everything kind of comes down to a comparison between basically these two downward arcs right here. Now, before you jump to conclusions and say, well, Booksy, if you're comparing these two, does that mean we're just going to do this? Well, the short answer is kind of, but that's not really what I'm seeing. So don't don't try to like jump ahead, right? Just let me kind of explain my thought process here. Basically, I had noticed that this particular fractal region was very, very similar to this fractal region, which it sort of serves as like a bullish trap of sorts. It makes you think that it's bottomed out and that it might spring. It has a lot of the same signposts as a normal spring would, except that at the very end, it goes down. So really, it's just a stepping stone and part of a distribution. Now, in examining this down sequence right here, I noticed that there seemed to be like a comparison to this fractal sequence. And so I was like, well, maybe we should be looking for this kind of a bottom. And the more I started to look at it and the more I started to examine, I just kind of noticed this S-curve. And it occurred to me that I'd seen that S-curve somewhere else, and I've seen it all over the stock. There's an S-curve right here. There's one right here, even though it kind of bottoms out, it actually does go lower here. And there's a major S-curve right here. And then on the whole, sure enough, when you map it out and you actually look and just kind of watch it, you can see that there's actually an S-curve here. And if you zoom out, you'll see that, oh, there's an S-curve here. And the fractal sequence, as it comes down from a high or from a distribution point, right, creates this S-curve when it bottoms out. And this S-curve I've examined in other areas as a spring, because oftentimes when it does S-curve, you get a sudden drop at the end, right, which causes kind of like the final part of the curve to go almost down. And then basically you get a hard bounce out of that region. And you start to accumulate, right, wherever you landed, and that takes you out and away. Now, without speculating too much right now, I did another video about this pretty recently. I believe it was on Friday, May 6th. And I talked about how I thought this is possibly the bottom. You could see one more large dip. GME makes it look like there's probably another one, or there's not another one, but AMC makes it look more like there is. Ideally, even if we did dip more, we would want to kind of keep it at the same level, because as I was saying before, I noticed that this is the kind of bottom you were looking for. And I also happen to notice that this particular fractal sequence right here greatly matches the fractal sequence at right here, but it's much, much larger. And so if you look at, I'm going to do a bars pattern. If you were to look at this bottom here, essentially what I think is playing out, and this is sort of where I started with discovery. I'm going to go to a 30-minute because that way you can see it a little bit better, the details. The hour just is a little too much brevity there. Yeah. Okay. So essentially what I'm looking at is a sequencing that matches. And if you notice that these match 1-to-1, and you can even see that the bottoms are very, very similar. Let's do a 15-minute and get even more detail. You start to realize that perhaps, and what makes a lot of sense, and what did occur here, if you notice on this bounce, right, after this S-curve comes down and it bounces, it goes to a lower low. But then it retreats and it essentially recaptures, close enough anyways, the previous low. Well, what happened when we hit this point is that we bounced and we went to a lower low. And if this holds here, then we're basically coming back to our previous low region. Now, I know we dipped low, right? But really, we kind of went right back to where we were before. And that would sync up with this particular bottom fractal right here. And this bottom fractal represents a turning point, a little bit of a turning point in the stock. But it's kind of like a relief, right? Where you're kind of settling in to another low. So in looking at this, you can see why I think that they're very, very similar, if not identical. And even on the downward action, you have this 1, 2, 3, and we have a 1, 2, and a 3 right here, right? And there's a final drop with a little bump at the end if you look and examine this bottom, okay? So all of that being said, once I noticed that, I started to realize that the S-curves are nested inside of each other, and you can actually sort of examine how these things are playing out. And it seems to me, and though I've never proved it before, it seems to me that there may be an expanding fractal sequence here. We often talk about a shrinking iteration being the start of a spring. I think the result of a spring often will be and could be a expanding iteration. So check it out. Basically, I'm just going to walk you through what I see. So I see this S-curve here, and this S-curve is built off of another S-curve. So it's the second half, all right, of this S-curve. And this S-curve, this blue S-curve, is built off of another S-curve, and it's the second half of this larger purple S-curve. You see where I'm going with this? Well, this purple S-curve has a different bottom than this S-curve, than does this S-curve. Each one, right, is offset from the next. There is not another S-curve from where we are. This is the macro S-curve. This is the halfway point of that S-curve. This is the halfway point of that S-curve. And yes, you can go to the halfway point of that S-curve and draw another S-curve right here. Now, I didn't do that, but you could. You can see it would look just like this, okay? And this would be the bounce into this S-curve. So what occurs here is very interesting. Basically what I did is I took a previous arc that I had drawn when I was studying S-curves on the main sequence. And I noticed that when this S-curve hits the arc, what occurs is it bounces. It sort of finishes this arc, right, this top arc, by coming up and touching, right, where it left off. And then it cascades down and it breaks through the arc. And this is really important. You might be saying, well, Booksy, why not just draw it like this, right, like a normal human being? Because when you do it this way, you actually get a lot more information. And the thing is, when I originally drew this yellow arc, it wasn't yellow, it was like blue or something like that. And it's on a bunch of old charts if you want to like dig them out. I'm not going to dig them out right now. But this was a very significant curve. And it's one that stayed true for a long time. And you can see that when it recaptured it, it almost forms these inverse, I would say head and shoulders, not really like that, but it's following this momentum curve, okay? And basically, you'll notice that what happens is that once it breaks through here, it goes back up and it breaks above this previous level of support and resistance. And this is basically where you're talking about different sort of stepping stones, all right? Now, it's important to note that the very first bounce did not go all the way up, but look at what the first bounce did do. Okay, the first bounce here did go back to the previous. This other S-curve also has kind of a center point to it, right? And you can see that the center point, roughly, in this case, in the yellow curve, this is roughly the center point, is where that high is. So again, roughly the center point is where this high is, all right? And if you look at where the curve hooks up right here, you can see that it does actually meet up with a hook right here where it retested, you know, and it said, nope, we're not going back up, came back down. So this is really significant because we're going to see how this expands in just a second. So I hope you kind of gather that. All right. Okay. I'm going to make this one green just to keep it like clean. All right. So what occurs next is that it comes back down. It basically retreats to almost previous lows, but now it's on a new arc. In this case, it's got to recapture this yellow momentum arc, but it's also creating like a new bottom. Okay, now that new bottom isn't fully respected, but you can see that it sort of becomes like the main, bounce arc for this, as does the top arc that's then created. So let's recap really quick. Stay with me. You have iteration, iteration, larger iteration, largest iteration. All right, each one is broken in half. When the yellow here bounces off of its momentum arc, this J hook, it passes through it and interestingly creates the bottom of the next. So as it passes through, okay, it creates the bottom of the next arc. So what does this all mean? Doesn't mean anything. Well, again, if it follows that this fractal right here matches this fractal, and it does, and this fractal sequence, right, is the first bounce, and this is the second bounce, then it goes to say that basically we're going to see the rest of this play out, starting with this move right here, okay, back down to a newer lower low, and that's exactly what I've drawn right here. The blue has an S-curve. Again, we're looking at the split, the halfway point. And what's interesting is I never drew this S-curve before, but sure enough, like there it is. And what's crazy is how ridiculously well it fits. I mean, even this bizarro price hits right here that never really line up, right? Because remember, like these middle hits always seem to be a little too high. It's always like, why are they higher, Well, they're definitely hitting on these curves, which is fascinating. So this S curve comes down, it hits the bottom of the momentum arc, which is very much established, by these 3 touch points. So this creates the bottom of the curve. What occurred here? Well, it bounced up, right? It retested basically the previous support level, right? It bounces, then it goes up, way up to the previous support, like it really confirms it, and then essentially recaptures the momentum arc. So here on the blue, you hit the bottom of the arc, you come up, there it is, you retest the previous range, which is what occurred here. So this is your J hook, right? That's all created because of this yellow, but remember, if you look at the way it's nested, all right, the blue is being formed as the yellow is finishing. Just like here, as the green is finishing, retesting, right, the yellow is being formed. So in this case, we have a bounce. We break below the momentum curve, just like we did, over here. Just like we did over here. Okay, we're going to break these curves quite a bit. The one that matters the most is this one right here, because again, this is the bounce and the break. This is the bounce and the break. Remember on this one, when the yellow bounced, it created the bottom of the blue. So on this one, when the blue bounced, it's going to create the bottom of the next level up, which I'm just making purple. So from here on out, if this fractal sequence matches, and I think it does, and I showed you earlier the bars pattern, like right here, basically what I would expect from this point forward, okay, would be a bounce and a finish of the sequence. Now, what's very interesting to me here is that when this came back up, okay, it came all the way up to this 33.93 level, which is where a previous hook was, right, on this halfway point on the blue. If we go back and examine where the bounce happened on the previous iteration, you can see that again, it came up to here, right, which is where the hook was. So it's not inconsistent at all. Now, what the next move is, right, is it goes below the momentum arc and comes all the way up to recapture it, to retest the next level up, right, which in our case, the next level up is way up here at 45. And if you're wondering why I picked this particular value, there's a couple tops here that were really respected. This is probably, if I'm like guessing, this $46 is probably the actual hook. The other way to look at it would be to look at it, like if you see the sequencing similar to this, then you would say that more than likely this is the hook and not this massive one. Because these are like the two cat ears, right? And this is like the paw. So that's one way to look at it. You could also look at this whole bottom as this whole bottom, and then you could be like, no, the hook's way up here at 70. I mean, and that's, or 64. And that, I guess that's possible. I mean, I wouldn't complain about it. But let me explain why I think I'm correct about this. Again, just because of all the other stuff that lines up. So let's say you break here and you run. All right. Last time we ran like 17% per day, and I did the math, and it's basically, if it starts moving at earnings, we could easily run 160. I think it's 160% or something like that you could run in the same amount of time. But you have to remember that this move here is actually larger. So if you look, this first move is like 38%. The second move is 44%. So it's a larger move. So proportionally, right, this move is only 160%. And if you ran 160% in 9 days, which is how long this took right here, you'd only be up at $35. Now that only puts you around the same high, like just barely above it, right, that we were previously. And again, it's like, well, what happened last time? Well, last time we kind of did this like 1, 2, 3, 4, 5 run, where the third one was a little bit high, but it came all the way up to retest, all right, the previous mark. And then it broke out and ran through one more time. Well, if that were to occur here, then it would come up to test this almost perfectly, right? And then it would basically break out and run up a little bit more. When you look at it according to where all these other things line up, all right, it looks as though we could hit almost $50 because, and I said like 48, because again, looking at this bounce, right? And what I tried to do the best I could is to get it to sort of match where the blue comes off. And you can see it's very, very similar in the way that it matches, okay? This very first hook here is sort of what's resting on that curve. And this doesn't leave, right, and take off until it reaches the momentum curve again. So basically, right, and it doesn't quite get there, but it comes close. Basically, this is estimating. You can see that this is pretty close. It's bizarre too, because you wouldn't ever have seen this, right, unless you have this curve. But check out all these touch points on this curve running up. I mean, it's almost perfect, right? And it's very interesting to me because some of these things didn't make any sense to me before. I just wouldn't have seen them this way. So in looking at it, it's like, okay, well, this runs up, all right, and that's the curve. And it basically tops out at like $49 is where the curve seems to top out. If you look at this trend line that's going up, it also tops out here in the exact same pocket that we were sort of targeting. So that's basically two different things, right? This trend line and this momentum curve that to me like didn't exist before, not really. And then, I mean, this one I guess always did, but I mean, I wouldn't have necessarily drawn it this way. What's interesting to me though is that this is like very clearly, like this region, if you match it up with this region, just looks, this is exactly like the curve that we need, essentially, okay? So all I did then was I mapped out the rest of this fractal sequence. The reason that it looks like this and that it's so compressed, part of it is timing. In this case, this took all one cycle, right? But the same amount of time has passed since this began. So at this point, it's almost like a 1 to 4 or 4 to 1. Okay, so you have this being all of 1, this being all of 1. So that means that each one of these essentially 1, 2, 3. All right, so it's only going to take about 3 cycles. 1, 2, 3. It's only going to take about 3 cycles. I said 1 to 4. It's really like 1 to 3. I'm not sure why I said 1 to 4. I think because I'm just tired. All right, so in 3 cycles, you would be back down. Like in this case, it was 1 cycle altogether, but each one of these, right, if you divide it up into thirds, it takes up about a third. So that's the reason why it's timed out this particular way. It's just based on what we're experiencing right now, right, in the cycling. Now, also, what's very fascinating to me is that the future rollover dates begin on May 24th, and then the expirations are on June 17th. And in the past, when we've had hard run-ups into these expirations, typically the sell-off occurs, when you have them up to the rollovers, the sell-off occurs during the expirations. Now, it's only happened a few times that way, but it's mainly been on the bigger runs. So that's another piece of corroborating TA, things that kind of like oddly line up with this. In addition to that, you noticed probably right away that this actually completes the sequence as we know it. So we were talking about this in the other video, that it has to look like our main sequencing. It can't like be just some random thing. It can't have a shape that's unique, because it has to be an accumulation distribution fractal as we see them in AMC. And if it doesn't, right, then it doesn't make sense. Because again, if you haven't watched the macro video, the big one, I would definitely watch that and talk about this quite a bit. But basically, this is what I'm referring to when I say it needs to match. And this essentially is exactly what we see, all right, in that big bump right here. So again, corroborating, it seems to me, and this has always been what I thought may occur, that when we break up this region, that we're going to come down. Now, whether or not we do come down at this particular speed, perhaps is debatable. And this is where I'm going to talk about the scenarios now, okay? So this is the most bullish scenario. And I know you might think like, oh, this doesn't look that bullish. Well, this is a scenario that's compressed. It has us going down to 1020, somewhere between 1020 and 1150. We run up, all right? Because remember, what happens when you get done with this sequence is that you get a big run up. And where do you run up to? Well, you run up, and this would be like a markup, right, in this case. But you run up to the next curve. Well, the next curve in our case isn't really obvious, you know? If it's here, it would be something like this. And I cannot, verify. I mean, that actually looks really close. All right. So there you go. All right. Proof and point. Okay. That it would need to look something like this. All right. Going up to the next one. But this is the end of the sequence. And we know that at the end of the sequence, if it's ready to mark up, it's going to mark up. And this is what I would expect to see, more or less. Like a halfway point, something that looks a little like the January fractal, and then a move up perhaps to even higher. Okay, up here in this range. So looking at this, also, I noticed that if you look at how far this went, just proportionally, what's fascinating is that proportionally, this move right here is about double. It goes up to from like 1291 up to about 21, and then up to 34. So each time it moves about the same amount. So it's what's fascinating is that you measure here, right? And you do like a 1, 2. So you come up to the previous top here, roughly around like 40 to 45. This makes sense because this is a previous hard area we've not broken out of. And if we rejected from it, we came down, then we exit, right, the same way. We have to come back through it. And then you go about double the amount and you're right here. And again, maybe by coincidence, but I doubt it, you see that it's right on that trend line. And I just think that's really, really interesting, like the amount of precision there. And even if it took like an extra cycle to get there, it's not like incredibly different, you know? It still looks like about 50-50. So for me, I'm like, well, that's kind of odd, you know? But what else can I find? Well, I went ahead and I looked at Fibonacci levels. And I did a trend-based Fibonacci. And I said, well, what happens if you go from here to here to here, right? And it's about almost a 368 move, which if you guys remember, that's pretty similar to what we had here in June. And also interesting, right? Even though this doesn't look like a major markup, it actually kind of works out really well if you look at this in terms of a larger Elliott wave, okay? Because this would be 1, 2, 3, 4, and then 5, and 5 would be roughly the smallest, right? And I just think it's really fascinating. It doesn't have to be the smallest. I think this still works because 1 is smaller than 2, so it doesn't really matter. I mean, 1 is smaller than 3, so at this point, anything would really go with 5. The other reason why I have this working where it is because this is an accumulation fractal, and in an accumulation fractal, right here, they created a massive amount of buying, right? Because this didn't exist, remember? Like, this didn't exist before. All we had was this region up top. We came down, right? And then we got to this bottom, and now it's like one of the most bought areas on the stock. And that's just really fascinating because to me, that's a big deal. They were able to, with this particular fractal sequence right here, do a massive amount of accumulation. Well, where else do they need to do accumulation on AMC? Well, the smallest and least accumulated area on AMC is still this particular region. Us outside of like going up to 50 to 60, it's this region right here from $20 up to $36. It is the most unexplored region on AMC. So looking at this, if this was used to do a heavy accumulation in this lower zone, it makes perfect sense if this is a macro iteration of it. It's expanding outward that happens to fit these trend lines, that happens to fit, you know, all these other markers, right, almost perfectly. It makes perfect sense to me that it would come up here and examine this particular zone. Now, what happens after that point? Well, typically in a spring, right? And remember, once you get to the next bounce, okay? Remember, you go through and then you create, right? When you go through after the bounce, you're going to create a new bottom. And so at this point, it's important to note that even though it may seem like, okay, well, it's already broken through, so how can this be like validated? It broke through here as well. And that didn't create the next thing. I mean, it created like the bottom of this bounce, right? But it didn't create like a whole new momentum arc. Remember? So you have to remember like where you are in the sequence. After this whole thing, right, you break down and you create the next one. And it goes pretty far. In this case, it's a pretty substantial drop beyond. And this is a pretty substantial drop beyond where this curve is currently lined up. And if you look at it like proportionally, it looks really darn close. Okay? And so this makes perfect sense for us to come down and hit this bottom. And if you look where this kind of lines up, all right, look at where the liquidity zones are. Okay? Where is this particular liquidity zone lining up with a particular trend that we see? You can tell that this pocket here that we're trying to hit lines up really well first with kind of where we are right now. I mean, if it went down here, it wouldn't be like super surprising because it does sort of line up. But even better than that, in this particular region over here, I mean, it's perfect. And this is the trend line from the previous bounces. So it's like almost too perfect, right? That this is where it lands. So I went ahead and I took these values and I did some hypotheticals and I looked at, okay, how would this work out, right, if this is the case? And sure enough, if you look, there are several trend lines here, okay? And I'm gonna make these ones a little bit lighter. And everybody's been really concerned about like finding the right ones. And so far, they've all kind of been like, meh, they're all right, But there's a couple here that I think are just super significant. So number one is this one right here. So this is a trend line that dates way back, all right, it's years ago. And you can see that where this trend line, I know it's not like perfectly on there, but bear with me. Where this trend line, essentially where it lines up, is right around where our current target is. And again, I'm just like, okay, well, doesn't seem like it would be a coincidence because I didn't come to this with that expectation. It just so happens that that's exactly where it lined up when I did the time cycles. And again, even if you moved it over like a time cycle, it doesn't really make a big difference. So it's like ridiculously on point for that particular thing. Now, even if it had like a middle point, kind of like we did here, and it marked up again, I was looking at some other possibilities. And if you check it out, you see how this sort of hits this middle zone? Well, it would be really similar to that, all right? And you would mark up, and where could it go? Well, I took this particular line, which seemed to be very significantly exactly where I had drawn this middle area, right? This little pinch point. I didn't even, again, try to do that. It just happened. Like it was like exactly where I thought it could be. Now, again, that doesn't mean it's where it will happen, but if you look at where this middle trend goes through, you can see that it's like rejecting right here. And then after we passed through it, we did the same thing, right? And this particular way that I drew these cat ears over here as what they're going to be, it's like exactly what you would expect, essentially. Like you would basically run back through, right? You go up above it, then you go below, and you try it again. You can't do it, so you fail and you go down. I mean, and essentially you're forming one of these sideways looking, head and shoulder things, okay? So what's interesting here is I was like, all right, I took this, I duplicated it, and I got this line right here. And this was another one that looks a little bit like, a trend line through that 72. I took that line and duplicated it again, and this is where things get crazy, right? I took that line, I duplicated it again, okay, that's right here. And when I duplicated it again, and I brought it down and lined it up with this bottom, look at where it comes through. It came through right on the money, right where we were expecting that momentum arc to finish off. So I think what's most likely is that this line is the center line, okay? And basically, I'm going to make these different color. How about we make them, I don't know. Wish there was more colors on here. I'm going to make them like a really light turquoise. Because, I don't know. It doesn't mean this has to break out here. I put these other arrows because, like, I don't know. It could come back down and like retest some line or something. You know what I mean? Like, if another if something happens or massive OBV differentiation here, then yeah, sure, it could come down. But just observe like how on point this actually is. Let me get rid of these ones. Okay. And how spooky that is, right? That there happens to be all of this like really tightly knit trend work going on with this sequence that I pulled out of this tiny little area here, and it's based on a lot of other things. It's not like I pulled it out of thin air. All right, I didn't. But it's certainly like worth investigating, and definitely, in my opinion, this is something that I've never seen before, ever. Like where everything just sort of works. It like fits together perfectly. There's always been like kind of a question mark, especially about this area, what should and should not occur, right? You might be wondering, well, Booksy, what about all this stuff you've been talking about with, what about springs and this and that and all these things having to point to this or that? Well, they actually do really well. I mean, you can still draw a lot of these trend lines that seem to point also to this particular spring bottom. This is one of the ones that significantly has a lot of touch points right here, has touch points here. It has some touch points right here. Ultimately, it goes all the way back up to 72 essentially. Close enough anyways, right? Like it's sort of a relative trend line at that point. But the point is like it has a significant amount of evidence, right? That's saying like, okay, that seems also to fit really well. That it would be this particular trend, right? That you're moving around, and when you finally go over and hit it, you launch and you're done. Okay. So to me, and this is also a parallel, by the way, if you didn't notice, you can see that this is a parallel to this bottom trend. In addition to that, you think I'm done. I'm not. In addition to that, if this hits this point, okay, and it's a big if, I know, but if this hits like this $46 point, okay, or something like that, then you're going to have a massive, all right, massive widening channel. And I know that there's already like a semi-decent widening channel here that you can draw, like if you're using the recent touch points, again, which sort of almost perfectly line up with what we're seeing here. But if it comes up higher, then you're going to have an even larger one, right? And widening channel that goes down breaks up, typically. Now you might also see this other one here. This would be another widening channel, right, from here to here. And you would see that this widening channel would break down. And that makes sense because this one's going up. But it breaks down and then it reverses, right, based on these other trends and liquidity spikes, okay? So this is like a huge risk, right, to put something like this out there and say that this is what I think it is. But I'm very confident in it. Now, are there bearish scenarios? So in this case, the bearish scenario is that there are possibilities based on how low we go, right, that this particular sequencing right here, okay, don't worry about this stuff, but this particular sequencing right here doesn't actually come all the way up to this point. Now, if that were to occur, I would be a little confused because then you have this problem where, okay, well, we didn't finish, like we never came back up and retested this region. We have to get back there eventually, and maybe it would be right here. Maybe it would be in this final push. But there's a lot of liquidity that needs to be explored in this particular pocket. So I'm looking at $36 and $28. You see these little higher regions here? I'm looking at those as possible places where we basically don't break out, okay? And that bearish scenario would essentially just bring everything down. Bring everything down lower. It's that simple. So if you bring everything down to 36, you'll find that, it's not drastically that different. There's some places here, like you can see this touch point seems to confirm it again before it breaks below it. This also would be like a double top, basically. It would look like a very large distribution pattern because it'd be like a UT, a UTAD or something, and then it would fail. The bouncing motion here, that's the part where I'm like, I don't really know. There's no, coming only to 36, you don't really find that there's any trend lines that match up at that point. So maybe it would be like an arc, and that arc, would be across all of these, in some ways. In addition to that, it kind of messes up some other things, but certainly, maybe this is the bearish scenario, right? And you basically get these touches right here on this kind of a bottom before it finally falls off. So the bearish scenario in my mind is really just bound on these two values, 28 and 36. If it doesn't breach 28 or 36, then, and I mean, like if you start seeing this massive retreatment and then the double top, then it's going to come back down. Okay? It's that simple. The other bearish scenario, and this is the only other one I can think of, is that the way that this fractal formed on the bottom could potentially happen again. And I don't see that as the most likely thing. I mean, look at the volume. That's nice. I don't see that as the most likely thing because, again, I counted iterations coming down here. I mean, they were shrinking all the way down. So I think the spring is set. I don't think you need to see this action. And we're already below, the momentum arc. Like, we don't need to go lower to prove like, oh, we are below it. Like, we already are below it. So in my mind, it's not like a necessary thing to see this iteration. This is the one that goes up, 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 gets smaller and smaller and smaller. Those are the two main bear scenarios that I can think of. And yeah, obviously just falling off a cliff, all the way down to $8, $9, where this trend line takes you. Sure. I mean, I think that's a possibility. I don't really see why, aside from sort of like the same thing, right? There's like a massive push up because you have to recapture the top at some point. So you're going to end up coming way back up and you would leave all this liquidity unexplored, which again, doesn't really make a lot of sense to me based on what we know about our composite EMU. So, all right, that was a lot. I know. I'm probably way long on this video already. That's why I did 2 parts. We're going to talk a little bit about market concerns, and I talked a little about motive and narrative already, so I'm going to skip that because it's all just going after liquidity, okay? But I'm going to talk a little bit about market concerns. So a lot of people are flipping out because of our market tanking. And let's be honest, all right, it doesn't look great. I'm not going to sit here and sugarcoat it and say, hey, this is super bullish, like it's going to be awesome. Like, no, it's not super bullish, all right? It's not necessarily going to be awesome. I do think that typically in a move down like this, if it's sort of gradual, and it has been, then you're either going to have some catalyst, right, that throws you off the cliff all of a sudden and you just tank, or it's going to have repeated bounces. Whether or not it turns around, that's not what I'm really asking. I'm asking, like, does it have the possibility to bounce and move up again and give us like another run? Yeah, I think it does. But I want you to notice a couple things here, okay? If you look at the region from, let's just mark this off. Let's look at the region from November all the way to January 24th. And then let's look at AMC, and we'll look at the region from November all the way to January 24th. Now, these two regions have some things in common, but clearly SPY peaked later. SPY did not peak until December 31st, which is when we started to sort of tank. So if you look at the patterning here, we really didn't fall completely in line with SPY until right around the new year. And then we started going down hard. And then the sequencing seemed to be fairly identical, right? Seemed to be. And if you look at the next part of the sequence, right, which runs through the 24th of February, you can see that we also had some similar things happen, but there's some notable differences here, okay? First of all, we made a lower low on this bounce, so we were a little bit different. And then instead of going lower, we actually went higher. So we essentially, again, we were accumulating through this region. And then in the next region, when SPY went higher, we actually went lower. So even though people keep saying that we're like tied to SPY, there's actually been quite a bit of deviation. All right, and I'm going to color code these. So let's just say this eventually went lower. So we're going to color it red. This eventually went higher, though not by much. All right, these both did go lower. But, right, it only really started, for AMC, it was like the whole time. But for SPY, it only really started here. I'm coming to a point with this, so if you're like, why is he doing this? Then just chill for a second, and I'll show you what I mean. Okay, so this came lower, and this came higher. All right, now, the general direction, I know, if you look from here to here, it's just down. From here to here, it's just down. So on the whole, yes, clearly, they're kind of running together. But on the short term, the answer is no. They are not running together all the time. In fact, there's been some times here where it's been kind of opposite, you know? Really, if you look closely, the only time we ran together was this particular fractal sequence right here. So we can make this like, I don't know. Let's make this one like a lavender color, okay? And we're just sectioning it off. I know this isn't, again, on the whole, you look at it, you're like, yeah, they're just going down. But every other time they've been, even though the sequencing is similar, they've actually been opposite. Now I want you to notice something really, really, really important here, okay? And this is probably the most important point I can make about the market overall, all right? In this particular section, all the way up to March 29th, all right? Both of us are running really hard, okay? Now, AMC runs up to the 29th, and SPY runs up to the 29th. Where does SPY go? All right, when it comes up. Well, SPY comes up and it retests some previous levels. And it does come all the way up to basically a similar spot to where you would say maybe AMC was, slightly. At least on the long term. Now, on the short term, you can kind of look at this and you see like, okay, well, it didn't really come up that high. I mean, it came up to like this section over here from January to February. I know that you can go back further, but this is where I'm kind of going with this. AMC was on a steeper slant than SPY. SPY was moving up. So SPY kind of went back to this zone, right? That it wasn't going down during that zone, right? It was kind of going up during that zone. So it was coming up, it looked like it was going to recapture a bullish zone. AMC came up and looked like it was trying to recapture what was a bearish zone, and it rejected. So there's a key difference there. But look at the difference in February 9th, okay? February 9th, which is where we peaked here. Do you see this? This is really significant to me because, and I think this is really important. What occurs after this is very telling of these two stocks and how they're running or not running together. Even though both of them go down, SPY makes a lower low. AMC has not yet. So I know that they're both red, okay? But I'm actually going to put this as green, and I'm going to put this as red because SPY made a lower low. Maybe you can call it a spring. AMC did not. All right, it held its own. Why do I think that's sort of significant? If you look at the amount of travel that occurred here, this is 11%, and this is going to be a huge percentage, 61%. All right. It's still significant because the same amount of time passed. And even though AMC did fall farther, it didn't relative to itself compared to SPY. So what's curious to me now is, let's say both of these run up and retest one more time, these supports. Well, if we already kind of talked about this, if SPY were to do it, and if SPY were to have like one more test, let's say it bumps here, it creates a range, right? And it comes even remotely close to testing this, or even just testing this downtrend, right? Then it's only coming to like 450 or something, okay? If AMC comes to test its downtrend, well, this is that bearish scenario that I talked about of $36. But if they're only testing from this particular trend that we were looking at before, then it's clearly different, right? AMC is going to be making a new high, whereas SPY would not, you know, and maybe you could draw it like that and say, well, SPY could make a new high, and I guess it could. That's a possibility, right? If it did finish out this way. But my point here is that there's a pretty significant difference in like the amount of the distance traveled, right? And I know that this isn't saying that like, oh, it's obvious AMC is not going to tank with SPY. My point is that when the down moves on SPY occurred, AMC was opposite, right? It didn't react the same way. It didn't make a lower low. And only on these times when AMC is making a lower low is SPY, it's kind of running opposite of SPY. So they seem to run together on some pretty key points within the stock, but they also seem to run opposite, you know, at other pretty key points in the stock. So perhaps, you know, if we see a run, maybe AMC goes a lot further than SPY does. It's kind of what I'm coming to. And I think that it kind of makes sense. I mean, relative to itself, again, you can't say like it's percentage wise any better. It's not, right? So in this case, the move wasn't to the 1618. Okay. And in our case, the move was massive by comparison. So I think that AMC is in a position where even if the market's not doing well, that it can take advantage, right, of these relief bounces and like really push up. And you're talking about very volatile swings, right? And all that's going to do is put pressure on the shorts anytime it pushes up. Because on the way down, I don't really think that we're going to see a lot of change in OBV. So in my opinion, and I believe it, or at least for now, until I'm proven otherwise, I think that the bullish scenario is more likely. I just see it, it makes more sense to me. And I can see how on even a relief bounce, if SPY gets one and runs up a bit, that AMC could see a pretty significant push, at least to 36, if not to 48. So that's where I'm coming from with this chart. I hope you all enjoyed the video. I know it was long, but I do appreciate you sticking it out. And yeah, we'll talk to you later this week.